We are starting our next session, and before starting our Breakaway Session 6, we are having a presentation by Mr. Sapan Parekh, co-founder and Chief Business Officer, Leegality. Mr. Sapan Parekh, please can we have a round of applause for Sapan? He will be giving a presentation on disbursing loans 30% faster with Leegality. Paperless process. Sorry, I can read it once again. Or you can, please carry on.
Thank you so much. I'm just going to check this quickly. Yeah, it works. Yeah, it's fine. Hi, good afternoon. Am I audible? Great. I think I have an energetic crowd after coffee. So let's start. Today's topic is definitely a bit of a clickbait, but unlike other clickbaits, this one is actually true, right? And here I represent Leegality. I'm the co-founder. I'm here to offer a solution to help you disburse 30% faster. This is exactly what you want, right? I know that's what you want to hear. And during this conversation, we will see how it can happen, which will be easier both for your borrowers and easier for your team. So let me just start. The two heroes of any microfinance journey are your borrowers and your branch officers. For the sake of the presentation, I'm just going to refer them as Bindu and Manoj. They are the heroes of any journey, any business that we are running. Bindu here wants the loan faster. Bindu wants the loan to be at a cheaper rate. Manoj here wants to disburse more because his or her targets are linked to disbursement correctly and without any fraud. That's Manoj's goal. So we need to see that any technology process that we adopt in microfinance, whether in India or outside India, they help our heroes, which is Bindu and Manoj. And that's the key goal. Currently, any microfinance process, at least in India, goes through series of steps. The first 4 steps are the KYC step, the underwriting step, and the group training step. This is mandatory in the way the business functions in order to ensure that the right set of borrowers are taking loan. And we are not here to change that. What we are here to change is step 5 to step 9. This is the flow which requires a lot of paper process, where documents are printed, documents are scanned. Physically, it is signed on every page by the borrower, by the series of borrowers. And finally, it is also physically stored. To make it worse, when your auditor comes to audit, you have to pull that document out from the millions of paper you have, right? So that's an additional step. The key question here is whether we can reduce these number of steps, which can improve your disbursement rate and reduce your cost. That's the key part. Let's see what Mr. Shiv Prakash, who's the CTO of IFL Samasta, says. The branch would need to make sure everything is okay and review documents to see if everything is in order. So this whole paperwork process takes around 90 minutes every day for each center. That's a lot of time spent on paperwork. And you will, of course, not be surprised to know that paperwork is not just in the JLG piece, right? Paperwork is also there in MSME loans, in personal loans, product loans, insurance documents, even your HR documents. When somebody like Manoj joins the microfinance company, he or she also has to sign an employment agreement. That also is creating paperwork and reducing the speed of growth of business. So, is there a solution to this process? And have we identified the right problems here? Somebody like Bindu, when she takes the loan, instead of a 5-minute process, she has to go through 3 to 4 hours of paperwork process. Very importantly, if she misses any document or signs it incorrectly, she has to once again be called to the branch, or she has to be visited again, disrupting her day-to-day work, and she has to sign it again. Big problem for her. Employees like Manoj are spending lots of time in paperwork, as we just saw, 90 minutes per branch every day. Can we reduce it? Because if we save time there, Manoj can disburse more. right? Or we will require less people in branch to manage a branch in order to disburse the same amount of loans. That's effectively efficiency. And third, key part is the logistics of it, which is storage. That itself is a hassle. I don't think I need to tell anybody how much of a problem paperwork is at your own branches, right? Most significantly also is the RBI or regulatory compliance. Regulators do audits. Regulators want to know if everything is done correctly and the borrower interest is protected. So any sort of digitization or increase in disbursement needs to come with these 4 aspects in mind. Now, let's see if there is a better way, the legality way. Legality, when it comes into the process, reduces the 9-step process into 4. Once your KYC is done, once underwriting is done, and once the group training is done, all you have to do is provide a digital signing link to the borrower using the microfinance tablet or the agent's phone. The borrower on the same tablet will digitally sign it. Again, no paperwork, no pen or pencil involved. The microfinance company itself can digitally sign it automatically, so the branch officer does not have to sign every document. That's the second benefit. And the third, the signed agreement automatically goes back to the microfinance company and to the borrower. Nothing has been stored separately, and it's easily accessible. Now, I know practically in the microfinance process, a key fact statement is printed and given physically, and that can continue to be the way. However, none of the other documents needs to be printed or even digitally signed. Only the key fact statements can be given physically, because that's how expectations of regulators are, and I'm not here to change that. But the rest of the paperwork can all be done digitally. Let's see what Mr. Murthy is saying, who's the CEO of Dwara KGFS, another client of Leegalities. Everything is clearly visible and easy for customers who did not know how to sign. Customers who for the last 30 years of their lives have never signed anything, written a word, suddenly we can't expect them to physically sign 20 pages and expect them to understand what it is. With digital methods, the comprehension is going to be better, the confidence is going to be better, where they know that there is a digital audit trail of what they have just done. Now let's see what are the solutions Leegality brings. And I will just cover this very briefly because the actual meat is in the outcome. Leegality offers Bharat Sign, which is 15 types of different signatures depending on the kind of borrower you're interacting with. Leegality offers Bharat Stamp, where stamp papers are procured and digitally processed so that at branch level you do not have to maintain inventory. That's key for MSME loans and larger ticket size loans. Third, and very importantly for regulatory compliance, we have to prevent fraud. Today, everything is based on training the agent, whether they know the process properly, whether they have done the verification properly. We can automate this fraud verification using solutions like audit trail, geofencing, multi-factor authentication, and face match that ensures that at branch level, you know the process is working, right? And the last aspect of it is compliance and security. Leegality focuses a lot on compliance and security, and today we are used by 400 banking and finance clients so that you know that your documents are secure and they are compliant. Now, while I have said that we work with 400 customers, the actual meat is in knowing how many transactions we've done in the microfinance sector. This gives you trust. This tells you that we have been tried and we've been trusted, right? So in MFI's journey, we have done 2.5 crore transactions and we've digitized 1.5 crore documents. That's at a massive, massive scale. This shows we've been tried, we've been tested, and most importantly, the industry trusts us. The key reason for this trust is because we have uniquely tailored our product for the microfinance segment. I will just name a few specific features. One is the Aadhaar-based signature. The key question here to ask is, how is the digital signature itself generated? The borrower has to key in the Aadhaar number, and just basis their biometrics or their face scan, which is done using a UIDI app, the digital signature is created. Again, you will notice they do not need the mobile number linked to their Aadhaar, which is a key concern in the microfinance segment. They do not even need their mobile phones with them. Only with their biometrics or with their face scan can the transaction happen, which is a very, very big win. Second, there will be certain segments of customers who do not have Aadhaar number. Using our Aadhaar first system, you can always ensure that 100% onboarding is done digitally. Third, There are systems in place where you have to ensure that the borrowing and the lending happens in a particular branch. We have geofencing functionality which ensures that particular sectors and branches are segmented so transaction can happen only in those branches. Very important. And last, RBI requires you today to converse with your borrower in the local language. So while your agent is talking in local language, it possibly cannot be that the signing flow is in English. That is just unacceptable today in 2023. The signing flow, including the document, has to be in local language. So if the document is in Marathi, the consent can't be in English, right? So Leegality has built a local language flow that ensures in Maharashtra it's Marathi, in Tamil Nadu it's Tamil, and so on and so forth. That's very important, both for compliance and in order to give your branch officers and borrowers some amount of confidence. This is how the final audit trail of Leegality looks. You can see on screen, you will have the image of the borrower, you will have GPS of the borrower, and you will have signature details of the borrower along with the name as per their Aadhaar ID and limited Aadhaar information that is permitted. This can help you ensure that the right person is signing it at the right place and at the right time. Nothing is more powerful than an audit trail created by Leegality. And this is the outcome I was hinting at. 90 minutes in a branch now takes less than 10 minutes. High direct cost of paper takes zero cost. 30 disbursals a day can now move to 40 to 45 disbursals, effectively a good 30% jump. Storing has become very easy and almost free. And customers who were spending a lot of time in the branch now basically come and go very quickly. We can just play the video and see what Samasta has experienced basis.
Issues. I mean, sometimes the printers won't work. Sometimes papers won't be. Someone has to get all these things resolved. And it's also the review and couriering of these documents to the RO. And RO will call them and say something is missing. They again have to find out if it's lying somewhere. So all those issues are gone. I mean, I mean, all they have to focus on now is get the customer sign, e-sign the document, and then they're done. The system takes care of everything. It's a long process. I mean, that's what we cut down with Leegality. Loan documentation and the disbursement, the fund transfer would happen the same day. When we looked at the cost and the efficiency, it was a no-brainer that we need to move to e-sign. It's been nearly a year since we went live with Leegality, and it's been working absolutely fine for us.
I think when a large microfinance says something is a no-brainer and it's absolutely working fine, that's high praise. He doesn't have to say it's working great. Just him saying it's working fine is high praise when at the scale at which Samasta or most of the MFIs operate. So we've had the privilege of working with them, and thankfully we've been able to demonstrate outcomes for them, both in terms of process and more importantly in terms of ROI. So this just brings me that the smaller the MFI is, the earlier you digitize in your phase, the better is the ROI outcome. So here if you see, a smaller MFI less than 500 crore is getting a 70x return on every investment with Leegality. A larger MFI, because of their scale, is getting a 20x return. And this information we've collated from our clients to come to almost an exact number. These are some of the MFIs we are working with currently, and we come pre-integrated with a lot of industry solutions that you already use today. I'll just pause here for 5 seconds. And if you want to get into details of how Samasta has digitized, I think you can just scan the QR code, which will take you to a case study. And thank you a lot. We have a booth there. If you want to visit and talk to us, happy to do that. Just to re-emphasize in conclusion, we are here to help you digitize faster, disburse 30% faster, reduce your operational costs. While today we are trying to do this for India, we are looking forward to doing this for the world. Thank you so much.
Wait. Thank you, Sapan. So just a token of appreciation from Sa-Dhan, may I request Umesh Paliwal sir to come on stage, who is a board member, and give a small token of appreciation to Sapan. Please, lunch is coming very soon. Once again, please. And a photograph. Sir, a photograph. Both of you are there already. Okay. So we are now going to our next session. This is the Breakaway Session 6. And this session is new paradigms and practices in microfinance learning from other countries. For this, I would now request Mr. Suresh Krishna, co-founder and CEO, Yunus Social Business Fund, to come on stage first. Mr. Suresh Krishna. Okay, Karthik. Dr. Prasun Kumar Das, Secretary General, Asia Pacific Rural and Agricultural Credit Association. They are our international guests, so we Indians need to welcome them specially. Please. Mr. Ram Bahadur Yadav, President, Nepal Microfinance Bankers Association. Mohammad Abdul Awal, Executive Director, Credit and Development Forum, CDM Bangladesh. And Mr. Anjan Dasgupta, our own Mr. Anjan Da, Managing Director, ASA International India Microfinance Limited. So we are waiting for Mr. Suresh Krishna. Mr. Suresh Krishna is the co-founder and CEO of Yunus Social Business Fund, Bangalore, and co-founder and partner of Yunus Social Business India Initiatives. Suresh Krishna, sir, we are looking for you. I know. He was here just 2 minutes back. Mr. Suresh Krishna is the co-founder of Yunus Social Business Fund, Bangalore, and the co-founder and partner of Yunus Social Business India Initiatives. Yunus Social Business Fund, Bangalore Private Limited is affiliated with Yunus Social Business. So, sir?
Yes, thank you.
It's all yours now.
Hi, good afternoon, everyone. I think this is a session just before lunch. I hope people will have patience to wait for lunch. And actually, thank you all, gentlemen. I think this is a fabulous panel with decades of experience in microfinance, rural development, and so on. So what I will do is, the whole objective of this session is to learn from different countries, different regions, which has seen microfinance grow from its infancy to what it is today. So maybe quickly we'll have a quick round of introductions. Okay, thanks. Sorry, I just came running because I was caught up with somebody. Sorry about that. I was just caught up with somebody and it took a little time to come off here. So what we can do is we can have a quick round of introductions of our panel members. Maybe we can start from Mr. Ram. I think you have to switch it on.
Thank you. Good afternoon, everyone. I am Ram Bahadur Yadav from the NMBA, Nepal Microfinance Bankers Associations. It's shortly called the NMBA. and also working as a CEO of the National Microfinance Institutions. Okay, thank you.
Good afternoon, everybody. I'm Prasun Kumar Das. I'm currently working as a Secretary General of Asia Pacific Rural and Agricultural Credit Association, based out of Bangkok, Thailand. This is an UN associate agency established in 1977, and the birthplace is fortunately in New Delhi. So the idea of this association started in 1977 was to support the rural credit units in many countries in this part of the region, and also to support the rural cooperatives. And the mandate changed in 1984, so we have inducted the development financial institutions, and the mandate again changed in 90s when the microfinance has come into the APRACA as a part of its member institutions. We do have members from 24 countries in this region, and we work closely with all our members in India as well. Thank you.
Good afternoon. I am Anjan. I head ASHA India. ASHA India is part of ASHA International, which operates in 13 different countries across the globe. Additionally, I am also the secretary of West Bengal AMFI, which is an association of microfinance institution, banks, and other entities involved in financial inclusion in West Bengal. Thank you.
Oh my God, so quick.
Okay. Okay. Good afternoon, everybody, particularly my colleagues from Bangladesh. Credit and development, Credit and Development Forum has been the largest and the oldest network of microfinance in Bangladesh. When we were born in the year 1992, there was not a single national network in the world. I must thank Gigi and Sa-Dhan for inviting me to share experience with you. Thank you so much.
Thank you very much. I think what we are trying to achieve from this panel today is learning from various countries, or probably understanding what different countries have done in development of the microfinance sector. As you all know, I think microfinance started in various countries, but predominantly it was in India with Seva Bank and Professor Yunus in Bangladesh, which pioneered this whole work. But the sector went through a whole lot of ups and downs. I think not only just in India, but even across the country we have seen that. Today the sector has grown very strong and it's very huge. It is reaching to millions and millions of people, not just in India, but even in many countries too. But it has its own challenges. It has also seen many crises as we pass by. I think people talk about black swan events. I feel that microfinance is one such sector which has seen black swan events almost every second year. But still, the whole microfinance industry has actually been very resilient and has come out strongly year after year, even after many crises it has seen. If you look at some of the reasons for that is, yesterday somebody was telling me, this is one sector where you will have a lot of collaborations and cooperations between different actors in the sector, which is not same said as others. I mean, you will find collaborations and cooperations between industry players, say microfinance players, you have a regulator and the MFIs participate, but one of the strongest pillars has always been associations. They've been driving the whole sector, standing in front. Like you'll see in India, I think Sa-Dhan was started way back in 98, 99, but it's almost completing 25 years. So it's a great feeling to see that we have completed 25 years of building this sector. So in this 25 years, I think Sa-Dhan has always led from the front. Like it is not following the sector, but it has driven the sector where it should go. Whether it is in terms of asking the government for regulations, working with Reserve Bank and talking about how the microfinance should be regulated, the issues which is happening, and finally Reserve Bank also recognized Sa-Dhan as an SRO, that is a self-regulatory organization. So in India, we have seen these kinds of development, whether 2010 crisis or whether it's a COVID crisis, or before that the demonetizations which we had. I think the sector has gone through a whole lot of things. Despite that, there has been always efforts about how do we put the client at the center, how do we make sure the clients are also developing. It is not just, the development is not about the MFIs alone, but it's also about the development of the clients. The success of MFIs is always in the success of our own clients. So that's what the objective with which the MFI started. So I would like to probably ask my fellow panelists to talk about how they have seen the growth in their regions. Especially I would like to ask Mr. Prasun to talk about, because he sees the whole development of rural credit and agriculture credit across the whole Asia Pacific regions, how he has seen how it has grown and what are the innovations, most particularly post-COVID, what innovations people have done and how have they overcome these challenges.
No, thank you, Suresh. I think if you, how we are also emerging in Asia Pacific region because we work in 24 countries, and the Reserve Bank of India, Bangladesh Bank, Nepal Rashtra Bank, they are the founding member of APRACA. And when they started, they were thinking about how to support the rural credit institutions in these countries in terms of their supporting their capacity, understanding or narratives, developing the narratives for them, and also influencing the policy segment on how to support the rural credit. Now, with the time, we also changed ourselves. We have inducted microfinance as a part of our growth trajectory, and we found that the microfinance is everywhere. All the 24 countries where we work, microfinance are everywhere, including the Papua New Guinea. If you go to Papua New Guinea, you will see the microfinance. But what I observed, because of my work also here in 15 years in India and 15 years abroad, what I found that the models are different. Whether you'd say it's a business model is different, approach model are also different, and the financial models are also different. For example, if you go to Cambodia, the model is basically private-led model, not like India or Bangladesh, which was basically started with the NGO-led model or an objective-led model. Now, when the private sector come in Cambodia, they come with a profit motive, with a motive to support their investors in terms of profit. So what we found that the investors are not from the same country. They are either coming from Japan or from Korea because they do not have, in Japan, as you know, that they do not have an interest system. Because if you keep the money, they cannot pay interest because they have no inflation in the country. So what they do, they invest in other countries. For example, in Cambodia, in Myanmar, you will see all of them are Japanese investments. So that is the first motive they have. The second motive, they have a very good governance, which in some of our country, I remember in 2008, I had a paper which was published by Development and Savings and Development, that there I wrote about 56 MFIs we surveyed, and we found only 2 MFI do have proper governance and policies as a written document. Maybe the time has changed now after that 2009, 10, 11 crisis in India. But what we would like to bring from the best practices in other countries are the business models are different and the approaches of the central banks are also different. For example, in Cambodia, they have two types of microfinance institution: deposit-taking microfinance institution and non-deposit-taking microfinance. All of them are regulated by the central bank, but under the supervision part of it, the deposit-taking microfinance institutions do have a supervision and a client protection system. Whereas the non-deposit-taking microfinance, they do not have that supervision side, but they have only the reporting part. So there is two parts. One is supervision, another is reporting. So reporting is there, but supervision is not there. So in our case, where in India, whether we can have this kind of dual system, which will be important, but we do not have a deposit-taking microfinance here. So the client protection in terms of the depositors are already there only for those who are the deposit-taking microfinance. In India, we do not have a client protection for the microfinance clients. So the client protection for the microfinance should go for the borrower. So the borrower being a client, and as you know, we have a word called that credit is bought and insurance is sold. So when you buy a credit as a client, you have to depend on the supplier. So it's a supplier-led system where we do not have much client protection, and also we do not have the negotiation capacity of the rural clients. So that part is little bit missing in India, which is available in other countries, some other countries. Even a small country, for example, Laos, PDR, they also have a deposit-taking institution and also the non-deposit-taking institution. So when you have a deposit-taking institution, you do have the responsibility of the client protection. All this comes along with that. So the essence of this is that some of the banks, some of the microfinance have the opportunity to graduate themselves as a bank. Not like NBFI or NBFC, but as a complete bank. When they have a 5 year, I think it's a 5 year of this deposit taking and also have a proper supervision, they can be promoted as a bank. So that is an opportunity for the MFIs to convert itself as a bank. Not depends on the central bank's whims or maybe the central bank policies. So it's a natural phenomena of graduating the microfinance into a bank, and that helped them. That is also kind of a motivational part of them to support this type of system. Then we have seen in Papua New Guinea, they have also the small banks which are similar like India, but they have not started suddenly. Like today we need a small finance bank, so 10 of these 10 of the microfinance institutions come up and NBFCs come up with their application. They have actually graduated. I know one of the bank who is our member, Mama Bank in PNG. They actually started with a women group 20 years back, and now they become a bank. So the name is also Mama Bank, and they can take deposit. They are all over the country. So that's a very interesting part of their graduation system, and where all the support actually coming from the central banking system and other development financial institutions, the national level, the investors are also the global investors. I think I stop here for the timing if you have any other question.
Yes, I think we do have a couple of questions, Mr. Prasun. I think from your experience of across many other countries as an association, I think what maybe you can also enlighten a little bit about what are the different kinds of products and services people are offering. One is credit, you said, but deposits, insurance, and health insurance, whether it is there or not. Maybe it will be nice to, if you can present about what is the importance of that later. I will come back to you on that question. So maybe can I request Mr. Awal because he actually represents the oldest microfinance ecosystem or the sector in the whole world. You can use the podium. So I think in Bangladesh, Bangladesh is a very unique country. You will have a specific regulator for microfinance. You also have a specific fund which actually funds microfinance institutions. In India, many a times we were also looking at how we can have something like that in India. But we took a slightly different path. I think maybe Mr. Awal can enlighten us about what he thinks, how the microfinance sector has grown in Bangladesh, and more specifically post-COVID, and how, as an association, how they have actually spearheaded the whole microfinance movement in Bangladesh. Over to you, Mr. Awal.
Again, good afternoon, ladies and gentlemen. I must share with you confidentially, by the moderator, I was chosen to speak first. But Prasun, Secretary General of APRACA, said, I am regional and you are national. So I must speak first. Thank you so much. Yeah. In Bangladesh, we normally say that microfinance is the brand item of Bangladesh, the first innovation. We always say there are other two innovations in Bangladesh, which the rest of the world has a lot of interest. One is PKSF. It's a wonderful organization. Behind the growth of the sector, it has tremendous contribution. Another is Microcredit Regulatory Authority. It's a regulator totally independent of central bank. Only central bank governor is ex officio chairman of MRA. They have their new separate setup. They have their separate office. And in Bangladesh, major actors in microfinance industry, the MFIs, of course, they are the major actor. Second, MRA. Third, PKSF. And the last one is CDF and the banks. Perhaps you have heard from Mr. Fazlul Kader what is PKSF. Polli Karma Sahayak Foundation is an apex development organization in Bangladesh established by the government of Bangladesh for sustainable development of reduction through employment generation. PKSF was registered under Companies Act in Bangladesh. The background for establishing PKSF was a response to the need for a sustainable approach to poverty reduction in Bangladesh. In the 1980s, Bangladesh was facing a number of challenges, including high levels of poverty, unemployment, and inequality. The government recognized that traditional development approaches were ineffective in addressing these challenges and that a new approach was needed. So PKSF was established to provide microfinance and other supports to poor and marginalized communities in Bangladesh. Microcredit regulatory, as I said before, Bangladesh in 2006, to regulate and supervise the microfinance sector in Bangladesh, MRA was established. MRA is responsible promoting the sound and sustainable development of the microfinance sector and for protecting the interest of microfinance borrower. The establishment of MRA was a response to the rapid growth of microfinance sector in Bangladesh in 1990s and early 2000s. The growth was accompanied by a number of challenges, including over-lending, over-lapping, over-indebtedness, poor risk management, and unethical practices by some microfinance institutions. As MRA is a separate body, I already shared with you, it's an independent body. Perhaps this MRA is the only organization which was established in Bangladesh to monitor the microfinance institutions. There is, so far my understanding was there is another in the world, the Philippines, they have their separate regulatory authority. Our important actors I must share first, the client savings, the major contributors to the revolving loan fund. You will be happy because we call microfinance, which includes microcredit plus savings and other financial services. About 650 million micro savings are made by our clients, our members. This data reveals that MFI's total member savings represent approximately 31.07% of the total fund disbursed to the MFIs. The state-owned and the privately owned banks happens to be the second major contributors to revolving loan fund. The MFIs have disbursed Bangladeshi taka 2092 billion during the financial year 2021-22. During this time, the banks have disbursed Bangladeshi taka 544 billion in the microfinance sector. This shows that the banks fund to microfinance sector is 26% of the revolving loan fund. As Prasun said about the COVID and other disasters, during the COVID, challenges faced by microfinance institutions during COVID-19, number one, that reduced the incomes. The COVID-19 pandemic has led to a sharp decline in incomes for many microfinance borrowers. This is due to the job losses, business closures, and supply chain disruptions. Increased cost. MFIs have also faced increased cost due to the pandemic. This includes costs associated with staff safety measures, remote working, rising inflation, and digital transformation. Reduced access to capital. MFIs have also had difficulty accessing capital from investors due to the uncertainty caused by the pandemic. Increased portfolio at risk. The pandemic has led to an increase in portfolio at risk par for MFIs. This is because more borrowers are struggling to pay their loans. And recently, because of Ukraine and Russia war, there is a sector is facing many problems, including liquidity crisis. And the MFIs, because of this crisis, are facing a lot of the problems in disbursement of the loan because they are not getting capital or fund as they earlier got. So this is all about is a primary reaction, and I think Suresh will be happy if I stop here. Yes, sir. Right? Okay, thank you.
I know, I think there is a lot to learn from what Bangladesh has done, and especially CTF, I think the way they have actually managed the whole sector. We will come back to you again for the next question. Mr. Ram, your 5 minutes. You can use the podium. Yeah.
Okay, thank you. Once again, good afternoon, everyone. Delegates, distinguished guests, ladies and gentlemen. It gives me immense pleasure to be here as a panelist in this great event. So thank you so much, Sa-Dhan team, for providing the great opportunity for me. Thank you. I am present from the NMBA, Nepal Microfinance Bankers Associations. Nepal Microfinance Bankers Associations closely work with the Central Bank of Nepal and the Nepal government. And the NMBA work in the three sectors mainly. Firstly, NMBA work as a facilitation, coordination, and mainly work the lobbying, policy lobbying for the microfinance sectors. And secondly, we working on the institutional capacity building. So there are lots of microfinance institutions, total 57 microfinance institutions are the member of the NMBA. So our responsibility develop the institutional capacity and develop the human resource management, human resource. And thirdly, we working on the research, innovation, and knowledge management. So it's the job of the NMBA. Yeah. I just would like to share something about the microfinance industry. Yeah, microfinance industry of the Nepalese microfinance industry. So, as we all know about the microfinance and the microfinance, how the microfinance works, and what's the need of the microfinance institutions, and how we impacted to the society and mainly in the poor people. Yeah. So, in the case of the Nepal, microfinance emerged as a poverty reduction tool from 1990s and witnessed introduction of Grameen Bank financial system, Bangladesh, through establishment of Grameen Vikas Bank, Microfinance Development Bank with Nepal Rashtra Bank initiations. Private sector also implemented Grameen Bank financial system through Fingos, which were transferred into Microfinance Development Bank later. Microfinance Development Banks were then registered as a limited company and were licensed by NRB under Development Bank Act DBA, which were licensed again under BAFIA. BAFIA means Banking and Financial Institutions Act, Class D financial institutions, after withdrawal of DBA. And the central bank, earlier, there are only two types of banks, one the commercial banks and another the microfinance development banks. But in between, the central bank decided that they need the two types more than the two types of banks, that's called the development bank and financial institutions. So microfinance institutions classify under the D. So microfinance development bank are now called collectively as a microfinance financial institutions. Commercial bank, development bank are also downscaling their business in microfinance. Earlier, only the microfinance business can implemented by the microfinance institutions, but the central bank decided before 5 years ago, the commercial bank also needs and development bank financial company also needs to take the business in the rural sectors So the commercial banks, yeah, commercial bank and all of the banks as the just the downscaling the business in the microfinance sectors. And also many SACCOs are also microfinance service providers in Nepal. Through diverse suppliers, microfinance financial institutions are predominant players in the microfinance sectors in Nepal. The banking sector of Nepal is well established by the Nepal Trust Bank. There are 4 categories of financial institutions determined by their nature of operations and capital requirement. So there are currently 20 commercial banks in Nepal and the 17 working as a development bank, and the thirdly 17 also working as a finance institutions, and the recently 57 microfinance institutions working in the Nepal. But earlier, 2 years ago, before 2 years ago, Nepal has a total microfinance institutions, 99 microfinance institutions. Yeah? But recently, central bank focused on the merger and the acquisitions, so just fix the number of the 57 from the 99. So microfinance model is just applying in the Nepal Grameen bank financial systems, SHG also working in the Nepal, and individual and the agent basis also the work as a model. And the service we are providing the 2 types of service, as you all know that. One, the financial service is the credit, saving, micro insurance, and the remittance. And the non-financial service, mainly microfinance implementation as a business development and the financial literacy. So current status of the Nepalese microfinance, if you see the current status, that's the microfinance reached in 77 districts, providing access to finance and financial inclusion of 6 million rural households. Out of total 6 million clients, 3 million clients are the borrowers, 132 billions have the outstanding, and 167 billion are the saving. Saving, it's just mobilized from the clients. It's not allowed to mobilize from the public. Yeah? It's just saving from the clients. 214 billions borrowing. So main fund of source is borrowing the Nepalese microfinance industry is from the commercial bank. So mainly dependent microfinance institutions is heavily dependent on the commercial banks. If the commercial banks not give the loan and stop the loan, so microfinance so microfinance would be difficult to serve the people. So that's the situation. And the 5,100 microfinance branches in all over the country, around 23,000 staffs are involving in the sector of the microfinance institutions. 50 billion capital fund, around 50 billion capital fund invested from the individuals and the private sectors in the microfinance sectors. And recently now you can see the profit level is the Nepalese microfinance industry is going to worse side comparison with the last year. So just the profit 4.78 billions, and the many institutions, around 30% institutions is going in the minus side, negative side. Yeah. So there is the issue. And the ROE, you can see the 7%, and other ROA 1%, and NPA 7.25%. Yeah. So microfinance made a tremendous contribution in case of access to finance and promote the financial inclusion, promotion of financial literacy, women empowerment, entrepreneurship development, and etc. Considering 30% overlapping total microfinance penetration, around 70% in case of household and 14% in case of population. Higher concentration of microfinance in plain, hilly area and lower penetration, especially mountain area. If we see the trend of 5 years of loan increment age respectively, and the loan increment, the average is the 40%. 40% you just see for the 5 years. And the outreach average increment as a 25%. And the sectoral innovation, you can see that when the pandemic COVID situations face in the sectors, so sectors moving towards to the digital financing mainly. SMS banking, mobile and tablet banking, microfinance, and all of the microfinance recently linking with the e-Seva. This is a digital platform, phone pay, QR code. So all of the microfinance working the digital platform, and all of the loan automation, HRMI system. So all of the microfinance moving towards to digitalization their transactions. And if you see regarding the regulatory, due to movement against the microfinance here, so loan ceiling reduced from 1.5 million to 0.7 million recently. One institution, one customer policy. One institution, one customer policy, just interest cap, dividend cap, generally up to 15%, further 50% general reserve provisioning, and 35% to client protection fund, and 10% for the CSR. Loan loss provisioning increased from the 1 to 1.3%. Service charge reduced from the 1.5% of the loan amount to 0.2% if the loan is settled prior to maturity. Loan rescheduling provision for up to 6 months. Merger and acquisition initiated by the central bank. Capital adequacy should be maintained minimum 8% in general, and in case of the dividend distribution should be maintained at the minimum 9%. CRR should be maintained minimum 0.5%. Microfinance mobilize the fund up to 30 times of the core capital and emphasize on client protection principle, 33% collateral loan and 33% in the agriculture should be compulsory. And regarding the market scenario, microfinance are in the consolidation phase in the case of the Nepal, and the anti-microfinance movement is there going on. Liquidity crisis, increased the NPL and surviving. Now the microfinance is a surviving challenge. It's the bad situation for the microfinance sectors, and the new initiatives taken to address the new challenges. NRB formed a high-level committee to address the current issue of the microfinance institutions. The committee has already handed over the study report to the governor of the central bank. Financial literacy initiatives are taken by NMBA, microfinance institutions, and the NRB. Code of conduct of microfinance institutions has been provided by NMBA. CIB strictly implemented, established the new desk in NRB and the microfinance institution to address the grievances and all of the issue of the clients. So way forward, just the social banking is the future journey of the microfinance. Underlying principle, focus on people rather than loan portfolio, create value for clients. Microfinance institutions should be banker to the poor, not only the bankers. So just we can say the microfinance is a tool, and it is the effectiveness depends on the how you use it. The mission of microfinance can be regained only if we take financial goal as a means for bigger goal in our mind, harmony in society, and preserving the nature. So that's the condition of the Nepalese microfinance industry. Yeah. So how is the going on, and what is the situations? Yeah. So in the Nepalese microfinance industry recently, they are the not good the situations, but the situations are going to improving sides. They working, the central bank working as well, government working as well, NMBA working initiatives to talking and the coordination with the political parties and the Home Ministry, Finance Ministry, and all the sectors. Okay, thank you.
Thank you,
Thank you.
Ram. It was a very comprehensive report of what's happening in Nepal. I really liked your statements of microfinance should be the banker to the poor. I think coming to the real person who was working on the field, Anjan, I think maybe if you can take 3 minutes because we're slightly running out of time. Maybe if you can focus on, I think post-COVID, I think you as an institution have gone through a lot of challenges. Probably you can talk about how you overcome that and what are the factors which influenced you to come out of that?
Yeah, thank you, Suresh. Good afternoon, everybody. After hearing my panelists, especially Nepal, I mean, I won't call my crisis a crisis, I would call it episodes. You know, so we're far better placed than others here. Let me start with the positive part of what we are having post-COVID. I mean, I divide the situation, I won't call it crisis, I call it always episodes. You know, we know how to actually play the game with all these episodes. I would divide it into 2 eras. One is the BC, you know, that is before COVID. And the next is the AD, you know. I mean, AD is not again despair, it is or digital, you know, like, I mean, we are going towards more digital out of the crisis. I mean, every crisis or every episode offers you opportunities. Now, let us take the positives that have happened in India, despite the COVID, despite all that we have all faced. Is number one, the regulations. You know, the regulations was one best thing to happen, which was harmonization of the total regulations with the banks and other, I mean, practically they have changed the name to regulated entities, not microfinance institutions and banking institutions. So, number one, the restrictive interest cap went out. I've always heard when I've gone abroad for seeking funding for my organization from international investors, they've always said that your interest rate does not take care of the credit risk. And it was amply proved during COVID, the kind of credit risk that we had. We always used to be proud, oh, our NPA is less than 1%. We as an institution said our NPA is less than 0.5%. But we could have never imagined that the NPAs could go up to such a high level. You know, that was the trigger of the crisis where the margins were low and we could not address the issue of credit losses that we suffered. That was addressed in the regulations that came in, and the regulations also had so many aspects which covered what Prasun sir was talking about, the fair practices that are to be adopted by the microfinance institutions. You know, here the costing for the funds, you know, they involved everything. You know, so I mean, people call it cross-selling, I call it cross-dumping. You know, we have found that, I mean, pre-COVID, a household having 5 solar lamps, you know, so what are you doing those 5 solar lamps? Is that each time I take a loan, they have asked me to take a solar lamp, you know. So, but that's not done, you know. Now if anybody is offering a solar lamp, his costing has to include those particular stuff. So even the regulations have covered the fair practices code. That is number 2. Another positive is, besides the RBI's regulations, what Prasun sir was mentioning about Cambodia and other countries, we have very strong SROs out here. Sa-Dhan is there, MFIN is there. They have the common responsible lending code. As long as everybody abides by those common responsible lending code, we have a wonderful environment that we are operating into. You know, so that needs to be abided, but there are going to be stray entities not abiding by it, creating problems for others. I keep saying in panel discussions, it's not enough that you are driving very safe. I mean, your neighbor driver also is important. I mean, if he's not driving safe, you're going to meet an disaster or a accident, So that is how it is. Then I would say that the digital environment in India. The digital environment in India is brilliant. I've always said, I mean, when I was seeing presentation by our other international entities during our conferences held at a holding level, I mean, they're talking about digital and going forward, what digital is coming in. I mean, I stop myself, I can't say there, like, oh, we already have it, oh, we have the UPI, we have all our clients having bank accounts, we can make disbursements automatically, we have facilities for QR collections, we have facilities for UPI collections, so everything is in place out here. So that's a wonderful environment that we have got out here. That needs to be actually, the opportunity needs to be taken into. Similarly, I mean, I think in India we have one of the best credit bureau. It captures full data. I mean, nowhere I've seen, at least not to my knowledge, Prasun sir can help me out, that such a brilliant credit bureau data, which is, I mean, covering everybody. So that actually covers, and it covers, but again, I will add a pinch of salt to it, provided people look at it, provided people abide by it, provided people are observing the spirit of the credit bureau. So again, coming back to the Sa-Dhan or MFin, we have our independent database. On the HR front, we capture full details of all our employees, and if any employee is involved in any financial impropriety, that is captured on the system. So none of the financial institutions or MFIs will recruit him. So that's another brilliant facility that we have in our system. Added to that, the government level, PF, the social security, if somebody is hiding, I mean, somebody joins us and he hides at the previous employment, he's made some misappropriation and has come here, that is also available. The moment we go and register his PF, we get that, no, he's already having a PF account number, which is withheld. So the total environment is actually helping us, covering us, effectively. But again, what are the challenges? Like, I'll have to talk about the challenges. The regulations are evolving. There are certain gaps. Reserve Bank has come out, every time there was a crisis, Reserve Bank has come out with a brilliant circular. So they are actually proactive. But there are certain challenges on the circulars too, but they will be addressed over time. Challenges in the form of, number one, like in the new regulations they brought in that your eligible asset has to be 75% of the total asset. The previous regulation was better. The previous regulation was the total asset had certain exclusions, which were the cash balances and certain other exclusions. It is not that. So it is virtually, if you are observing the spirit of the law, if you are providing the right kind of data to Reserve Bank of India, it is virtually impossible to achieve that 75% criteria. The reason is what? You might suddenly get a loan from somewhere, which you cannot deploy for the next 3 months, which is a high loan. That will be in your cash balances. You can't actually meet the 75% criteria. Similarly, you have a very high repayment, which you're building up over the months. You've got a huge cash balance. You can't meet that kind of data. The challenges on the credit bureau. The credit bureau captures the data. It does not capture the data of NGOs and other lending institutions. For banks, they have a system of if any client is doing settlement, write-off and all that, you have a tagging of settlement. But for the MFIs, you don't have that kind of tagging done. It is not comprehensive. While we are considering the family income, now, suppose I give a loan to my clients, I am unable to check up whether her husband owns a loan, has a loan which is a defaulted loan, or a relative has the daughter who is part of the family income has a loan which is a defaulted loan. So these are the challenges if they are addressed. I mean, when we go to the credit bureau and tell them that no, you please rectify this, bring in all this thing, they said that no, we are a regulated entity. There has to be a policy at the regulator level, and these needs to be rectified. The other challenge is the funding. I mean, other Prasun sir and others said that they can access deposit, which we are not allowed to access. Recently, a team visited Bangladesh from West Bengal Amphi. I mean, in one of the institutions, when we went and met the CEO and we told him that no, we are not allowed deposit. I mean, he said, then how are you doing microfinance? So, I mean, if you can't access deposit and you're dependent on the bankers, I always say the bankers, they'll give you the umbrella when the sky is absolutely clear, and they will snatch it away when there are, I mean, dark clouds looming in the horizon. So that's a problem, and then, I mean, you have built up a portfolio. My personal company's case, I can tell you, we had a portfolio of 1,300 crores. You had to bring it down to 400 crores to repay all our bankers. Like, I mean, they were scared, that COVID, I mean, it's not that the event had happened. I mean, COVID was arriving and everybody was very nervous about it and everybody was trying to save their skin. On one side, we talk about impact investment. On the other side, we get scared, impact investment is done for the underprivileged, and there are crises that can be, they are most vulnerable to any events or crisis. So we should be patient, having patience for them. So these are my initial thought. I mean, Suresh sir knows I'm a Bengali. I mean, if I keep talking, I will go on talking, So these were my initial thoughts. Thank you.
Thank you, Anjan. Before coming to the audience, I think there's a lot of experience, which is a lot of things have happened post-COVID. I think a lot of wonderful things have happened, at the same time challenges are there. I think we can go on. I think we too have, I think it's already a little over time now. So maybe we can take one question, or two questions from the audience, and then I'll come back to my panelists for their last comments. Yes, please, over to you. And you can go there, and please be, can somebody give a mic to that person there? Yeah, it's working, but can you please ask your question directly, and you don't have to elaborate it. I'm sure the people in this understand it very well. So because in the
Thank you very much for giving opportunity to me. This is Shohrab Ali Khan, Deputy Executive Director, TMSS. You know, as well, TMSS is one of the largest MFI in Bangladesh. I'd like to request Mr. Prasun Kumar Das, Honorable Secretary General of APRACA, because his experience is vast, and APRACA is working in several countries of Asia and Pacific. Please, from your experience, what do you think about future risks and challenges in South Asian microfinance? At the same time, what are your suggestions for us? Thank you very much.
Thank you very much. Maybe we'll take one more question and then come back to the response. Anybody else in the audience have any more questions? Yes, please.
Thank you very much. Myself, Narendra Naik, I represent OSAP, Odisha State Association of Finance. It's the association of MFIs in the state. We work very closely with the vulnerable people, women members, all over Odisha and all over India. And microfinance has been a resilient sector. So my specific question to the panelists is that what has been so far the impacts of microfinance in the lives of the people, women members specifically? We are talking a lot about the empowerment, poverty reduction,
we get the point.
and impact on their lifestyle across
Sure,
this.
Thank you very much. I
Thank
think maybe we can, okay, we're already a little over time. So maybe Prasun sir, we can talk about things. I think the question what he asked, in fact, it is the same question which I had asked you too. I mean, we had a chat before.
No, thank you.
You can respond and maybe we can continue with that.
Yeah, for your information, TMS is also a member of APRACA. So the questions you asked about what actually we're supposed to do, See, if we consider it a two-part, like what are the opportunities you have? The first opportunity is your operational efficiency. That is at the same time challenge and opportunity. You need your operational efficiency. Then the second one, which is very important because you are based customer-led, so insight of the customers, the need of the customers. You have your products which are 20 years old, which you need to change. The third one is the customization of your product. You do not have a product for, cannot have the same product for livestock and the crop farming. So need to change that. The fourth one is the risk management. None of the microfinance institutions do have the robust risk management system. And with this, I'm not talking about the credit risk or market risk. I'm talking about now the climate risk, the ESG. You do not have that. So that are the challenges and opportunities as well. And finally, the governance, which are very important, and the governance should be written. And now what should you do? MFIs, for the MFIs. Make a strategy which are more robust for identifying and challenging the underlying assumptions. As my friend from Nepal was telling, no, that microfinance are shark in Nepal nowadays. So that's an underlying. So you have to come out of that. Second one is improve the reaction time. We have seen the COVID. Anjan was talking about COVID. But I must say the reaction time was really late. We started working maybe 6 or 8 months late. So that reaction time. I think these are the few areas we need to look.
Yes,
Thank you.
Thank you, Mr. President. Ram, do you want to just give your final thoughts about, I think, yes, Nepal is going through a lot of challenges, but one of the points which Prasun also pointed out, which I wanted to ask you in the last, but then it came up, is what is the preparedness for, with the MFIs, on even the clients of MFIs towards climate change?
Yeah, thank you. Microfinance, we all well know that the microfinance working at the base of the triple bottom line. Yeah. So triple bottom lines means first is the financial economy, and the second one is the social side, and third one is the environment protections. Yeah. So in the case of the Nepalese microfinance industry, collaborated with the different NGOs, which working on the side of the climate side and the renewable energy side. Yeah. So microfinance, they are already the such types of the product, renewable energy product, yeah, and the hydro project product. Yeah. So in the case of the Nepal's, so in the the microfinance working the lots of things on the biogas and solar. Yeah. Right. So, thank you.
Thank you, Ram. Ms. Anjan, I think maybe you can quickly respond to that person's question and probably tell you how are you preparing for future shocks as a MFI.
Number one, answering Mr. Naik's question, impact is there, it has been often discussed, everyone, our practitioners out here, they know what is the impact. It's not only the financial income increase, it includes whole gamut of a change that is brought in the lifestyle of the customer. It could be in health, it could be education of children, building up the next generation, and the house quality, medical health conditions and everything. So this is a known hello, yeah, it's a known fact. I'll tell an incident, small incident. which is quite different than what we think that microfinance is the impact. I had a guest, MRI's head of Bangladesh, who had come to me. He said that I went to one of the clients, and then, I mean, in a particular area where there are a lot of talaks and all that, So I asked, which was the question I should not have asked. I asked a question to a lady saying that, are you covered, if your husband gives you talak or divorce or such a thing, and the lady immediately retorted back, "Ki talak? Why he'll give me? I will give him talak." So that is the kind of empowerment, the woman power, or building them up. Now we are not talking about developing women. Even our Prime Minister has said, women-led development. That is a much more appropriate term which is being used now. The future shock, which, shall I cover that or anybody else will cover that? Or I'll quickly go. Yeah, 30 seconds, okay. The future shocks, yes. Number one, mantra will be digital, moving away from those weekly collections, meeting them and finding out more innovative collections during crisis. We don't have to wait for the clients to come into a group meeting and make the payments, and then reducing costs, offering them better products, and getting out of that syndrome. After all, we have to understand that we are in the social sector. It's all right to wear a grey suit, but please carry the grey, the jhola bag in your soul. That is enough to build up the.
Mr. Awal, in 30 seconds, can you tell us what you think should MFIs be doing to prepare for future shocks? Your 30 seconds, yeah.
I believe there is always a shock, there is always a risk, and we have to survive them. In Bangladesh, just adding to Anjan, there is an effort underway at the moment for micro insurance, how our members and clients we can accommodate them here. So, in addition to them, we have some sort of informal insurance system, just a welfare, in the name of welfare risk fund or welfare fund. So, yeah, thank you.
Thank you very much. I think we are already run out of time. I think it was a fabulous discussion looking at all different challenges and different solutions and how MFIs have actually overcome that. I think we'll close this panel. I think we can continue discussions later. But I think I just want to add one line, like my last 30 seconds of mine, is if you look at how the microfinance has developed in the last 2-3 decades and how it should be developing, I think it should follow the same principles of how it had developed itself. I think we always had a healthy competition combined with very good, healthy coordination and cooperations among the whole microfinance sector. I think if we continue doing that, I'm sure we will be able to overcome whatever is the challenges coming forward, and we'll be able to strengthen ourselves by using great technologies. I think today we found that there are a lot of new players, new kinds of ways of doing has come up, new technologies has come up. So if we collaborate well and cooperate well, at the same time maintain a healthy competition, I think we will be able to make sure the clients are successful, and thereby our MFIs will be successful too. Thank you very much for listening, and thank you very much, gentlemen, for a fabulous discussion. Thank you very much.
Thank you, sir. Thank you so much for the lovely session. May I now request Dr. Shoibal Paul, Associate Director, Sa-Dhan, to just show us a... Shoibal Paul will be felicitating the speakers.
Now.
Mr. Suresh Krishna, co-founder and CEO of Yunus Social Business Fund. Please, lunch has been served, so you can use your energy now. Dr. Prasun Kumar Das, Secretary General, Asia Pacific Rural and Agricultural Credit Association, APRACA. Mr. Ram Bahadur Yadav, President, Nepal Microfinance Bankers Association, NMBA. We are facilitating them with a shawl and a plaque. Mr. Abdul Awal, Executive Director, Credit and Development Forum, CDF. Mr. Anjan Dasgupta, Managing Director, ASA International India Microfinance Limited. Thank you so much, sir. Dr. Shoibal Paul, can you stand here and have a group photo, please?